Hello everyone, George DeSantis here with a look at the market for the week ending June 9th, 2017. Let's take a look at the disclaimer before we continue. Trading and investing has large potential rewards and large potential risks. So this video presentation is designed for educational purposes only. It's not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. Consult a licensed professional investment advisor for investment advice, since I am not one. Let's begin by taking a look at some charts. Let's begin by looking at the monthly chart of the S&P 500 to get the bigger picture. What we see here is that the monthly chart is still trending up. In fact, we're making new highs. Since we broke through the 2400 resistance level that was about here, we are now closing at 2431. So the trend is up. The 4 EMA is above the 9 EMA, and that is above the 30 weighted moving average. So basically the trend is up. Parabolic is below the most recent bar. Trend is up. Williams percent R is above the 20% line, so the momentum is still pretty high on this chart. MACD histogram is above the zero line, so we can say that the bulls are still in charge. And the RSI 12 is above the 60% line. The blue line is 60%. And Chaikin money flow continues to trend up. So the trend is up. So let's take a look at the weekly chart of the S&P 500. And on the weekly chart, we have a different picture. We have the S&P making a new high here, which was about 2400, and MACD making a new high. Then the market pulled back. The S&P pulled back, MACD dropped below the zero line, and the market then continued to rally up. But when it made a new high breaking above the 2400 level, and is now at 2431 closing price, what we find is that MACD histogram made a much lower high rather. And so we have this bearish divergence. As new highs are made, lower highs are made here on the MACD. So that's something we need to pay particular attention to for the general market. Chaikin money flow is still above the zero line. Money is still coming into this market. But we need to be particularly careful at this juncture here because we can see a bigger pullback in this market, perhaps to the 2400 level to test the support there. We'll see what occurs in the next week or two. Now on the daily chart of the S&P, a couple of ways to look at this. First of all, after this break above 2400, one way to look at it is that this market is consolidating this move up here. And that currently we are beginning to see some regression here or a correction to test the 2400 level. So we'll see if that gives us support at the 2400 level. As far as I'm concerned, we have to wait until we see that test to decide whether we should be more bearish on this market. Certainly MACD is continuing to trend down, but we don't have a divergence on the daily chart of MACD. So let's take a look at some individual stocks now. In general then, let me just sum up. The monthly chart is still bullish. The weekly chart, where we make our strategic decisions, which is what Alex suggests we do, and I believe it's a very good suggestion, that is showing us some weakness in terms of a bearish divergence of MACD. And on the daily chart though, we may have some support at the 2400. We need to see if we test that and see how that develops from there. So let's take a look at some individual stocks now. Now this is a weekly chart of NVIDIA. It's one that I own. I'll tell you what I did here. This stock hit the 3 standard deviation Bollinger Band here, and it's been riding it up. Then it pulled back a bit here, 2 weeks ago. Last week, what happened is that it broke above the three standard deviation line. On Friday, when it started pulling back a lot, I decided to sell it because I had a very, very nice gain. And I don't want to trade, I don't want to give this gain back that I had. I didn't want to, so I sold it and took the gain. Can't lose by doing that. I will certainly look to buy it back. The technology sector pulled back on average about 3% on Friday alone. So because many of these stocks became overbought, like 3 or 4 standard deviations above the mean. That's very unusual. They don't remain there. So on the other hand, you can see that MACD is still trending up here. And this is probably going to find some support somewhere around the 9 EMA, and I might just look to buy it back. The RSI 12 continues to remain above the 50% line, in fact 60%. So that looks pretty encouraging from the point of view of the weekly chart. And the Shiken money flow, well, it's lost some strength here. So that's what I did on NVIDIA. I don't hesitate to sell and take gains now. So I did that with NVIDIA. Let's take a look at something else. Before we go on to another stock, take a look at this best choice chart, the regression channel, and we can see that recently it's been above the 90% line. In fact, it was around 90. It's right now it's at 97, even after this pullback. So this was also telling us this thing is pretty overbought. So that's why I didn't hesitate to sell it. And you can see that that 90% line usually leads to somewhat of a pullback, either to the 50 or the 10% line. So that's one of the reasons I sold it. Let's take a look at something else. Here's a weekly chart of Berkshire Hathaway. Now, in spite of the fact that we had that pullback on the technology stocks on Friday, Berkshire Hathaway was up $3. I think it was up $3 last week, but I believe most of that move was on Friday. That's right, $3.06. So if we go back to the weekly chart, we can see that MACD is trending up from below the zero line, and I'm holding this one. So we don't, and let's take a look at the best choice chart to see what that looks like. Now on the best choice chart, we can clearly see that this is now at 77, the extreme is 77%, and it's approaching the 90% line, but it's still not there. So we have room to go to reach that 90% and even exceed it as it did here. So once we get above that 90% line, we have to look to see whether we want to trade it or stay with it or what. So I'm holding it for now because we are in a nice uptrend here. Let's look at something else. And here's a weekly chart of Facebook. Facebook made this nice move here and even gapped up again. And now it seemed to be consolidating these gains that it made recently for the whole year, really, from January. So it's now in this area here. We'll see that there was a bearish divergence on the daily chart. This is the weekly. So let's take a look at the daily chart. On the daily chart, we saw that there was a divergence here of MACD. I drew that in recently. However, we have this big bearish candle now, what we had on Friday, which took all the technology stocks down about 3%, many of the FANG stocks. But let's look at a chart here from Best Choice on Facebook. And here's a daily chart of Facebook on the Best Choice program. What we see here is that the Facebook then pulled back all the way even below the 10% line, and it's now at the extreme level. We call these extremes. It's at 1.9. So according to this indicator here, or this chart, Facebook is now oversold. So wouldn't be surprised to see Facebook start making another move here, as it did whenever it touched that 10% line, whenever it touched it here, okay, and even when it hit the 50% line. But Facebook has been pretty steady in terms of its growth, price growth anyway. Let's take a look at something else. Here's a weekly chart of Microsoft. Now with Microsoft, we have somewhat of a similar story to Facebook. What we have here is a pretty bearish candle because it was down 2.63%, actually $1.63 or 2.27% last week. Actually went down that on Friday alone. Okay, so Facebook pulled back with the rest of the technology sector. But if we look at a daily chart, on the daily chart, it did pull back. You could see that pullback here after it hit that 3 standard deviation Bollinger Band. So we got this pullback here. However, let's take a look at what it looks like on the best choice chart. Now on the best choice chart, we could see the regression channel here. And what happened recently is that Microsoft went right out of the 90% of the channel, of the regression channel. So as a result, it pulled all the way back. So it's now at 73.6. Might pull back a bit more, closer to the 50% line or the 10% line, because you can see whenever it gets up above that 90% line, it tends to go through a little bit of correction. The general trend is up. This is a 6-month chart. So depends on what your investing or trading approach is, whether you hold it, sell it, buy it back, whatever approach you want to use. I'm just showing you what the charts look like. You make your own decision about that, of course you will. But I'm showing you that it pulled back into more of a buy zone here now. So that's what Microsoft looked like. Here's a weekly chart of Netflix. Another one of those techs that pulled back quite a bit. This pulled back about 4.7% last week. So what we see here is another bearish divergence. You see, as it made a new high, MACD made this high, then they broke the back of the bulls here, and now MACD made a much lower high than it did up here. So we had a bearish divergence, or we have a bearish divergence, and we're seeing that played out here. Quite a few of these technology stocks that have been running real fast, so to speak, and going through a pullback because of this bearish divergence on MACD. If we look at the best choice chart, we'll see what that looks like. On this best choice chart of Netflix, we can see here on the right side of the screen that we have this bar that we saw earlier, and now it's at the 15.9 level on the extremes. So the extreme means 90, 50, 10. Now it's at 15. So notice that whenever it gets to that 10%, approximately 10% level, it tends to rally from there. The other thing to notice about this is that the range between these two lines, the upper 90% and the 10% lines, very, very narrow. This is the kind of chart you want to see on a stock that you want to hold for any length of time. You don't want all that volatility. If we had a lot of volatility, we would see these bands being wider and a lot of fluctuation of price between them. So this is what we have here now. Netflix for the long haul. And maybe a good buying opportunity here. But let me summarize, because we're coming to the end of the video. By the way, I sold NiSource as I said I was going to, because I only hold it for the first 6 months of the year, and it was time to get rid of it. So in summary, the general market is still looking bullish. It is likely to test the 2400 level on the S&P. As far as individual stocks are concerned, quite a few of the technology stocks became overbought. They were at the 3 or 4 standard deviation level, and so the prices don't stay that high for very long. They usually regress toward the mean. So we did go through that, and I'm expecting some of these stocks to rebound from here. Might take another week or two, but that's what I'm expecting. Enjoy the rest of the weekend, and we'll try to do this again next week.